Good morning, everyone. I am your host, Melissa Marchand, Caribbean Strategy Director for G&M Caribbean. It is my pleasure to be here with you today and to bring to you in today's webcast Mr. Ben Moody, the legendary investment banker and Caribbean advisor who, together with his team, has structured over $1 billion in transactions in the renewable energy space. Welcome, Ben, to the webcast. And I'd also just like to thank you all for joining us today and welcome you all to today's call. I know that there's still a lot of people connecting, so I'm going to go ahead and just give a piece of logistics. Those of you that are joining us via Google Hangouts or YouTube Live, or those of you that are watching us on replay, I do want to remind you that you can adjust your screen resolution at the bottom right corner in order to get the best quality from today's presentations. So if the slides are looking a little bit blurry, you can just go ahead and click on the little gear button at the bottom right, and that will make the adjustment for you. We know that one of the top challenges that companies and investors in the Caribbean are facing in the renewable energy space is that financing piece, which is why we've brought Mr. Moody here with us today. We do have a question and answer session set up for today's webcast, so make sure you take advantage of that, and Ben Moody and I will be addressing those questions at the end of today's program. I'm going to start off today just by giving a brief overview of alternative energy developments in the Caribbean in order to give some dimension to the opportunities as well as the challenges that we're seeing in the sector. Can I have my first slide, please? Thank you. We have a snapshot here of retail power prices. And let's remember that rate structures are different in every market. But the takeaway here is that even after the 2015 adjustments that came from the lower oil price environment, energy costs in most Caribbean economies remain very high. The region remains highly dependent on fossil fuels. Clearly from the graph we can see that the oil producers have much lower electricity costs than net oil importers do. And let's also keep in mind that the retail costs in both the oil producing and the oil importing countries are in many cases subsidized. I want to stop on the case of Aruba for just one moment, which is one of the lower performers here on the chart. In Aruba's case, there's an important lesson learned, and there's also a business opportunity for Aruba and the rest of the Caribbean. Aruban consumers did not feel the reduction in oil prices come through into their electricity rates in 2015. And this is because of a hedge that the utility, which is called WEB, had put in place. The hedging contract covered between 80 and 90% of total volumes through 2016. So it was a 3-year instrument, and it secured a price for oil of around $85 a barrel. So that probably sounded great back in 2013 or even early 2014. But the problem is that breaking that hedge contract would have cost the company as much as 100 million florins, which made it unfeasible. Without dwelling too much on one case, finding the right instruments, especially in economies with electricity rates that are subsidized, is a major opportunity for the region. I know that last year the Dominican Republic also had a policy put in place with JP Morgan that essentially it secured oil prices below $65 a barrel. Another reason that power is so expensive is that a lot of plants throughout the Caribbean need upgraded, and they have half-century-old technology generating their power. The perfect case to demonstrate this was the JPS in Jamaica, which is the utility there. And they're finally going to replace their inefficient generation capacity, which is something that they've been trying to do for years, and they've had issues with the regulator on being able to do that. Around 350 megawatts of that company's 650 megawatt peak is produced by plants that are over 50 years old. And they do already have some upgrades in line this year, including a conversion to propane and then later on to natural gas. And that's the case with the JPS, but it's not the only company in the region that's struggling with aging plants. So there's also a lot of structural challenges in the Caribbean, like high losses, both technical and non-technical, inefficiencies in fuel delivery, inefficiencies in storage as well, and even issues like unpaid debts to utilities from state enterprises. Can I have the next slide? Then the next piece we're going to talk about is the energy matrix. On the chart at the left, we just took a snapshot of several markets to give some scale to the fossil fuel generation capacity that's installed. And the dependency ratio on fossil fuels for power generation, which are those blue dots that you're seeing there. What we want to point out here is that there's a significant portion of energy that continues to be generated by fossil fuels. Now on the right side, I just outlined a few sustainable energy targets, kind of going through in alphabetical order throughout the region. But these targets are all outlined in our Caribbean Energy and Mining Report, so I'm not going to get into detail and go through them all, but there's clearly a policy tendency towards sustainable energy, and the targets are far from being attained, which is good news if you want to invest in alternative energy solutions in the Caribbean. Can I have the next slide, please? Some of the framework adjustments that are being tried around the region, like include net metering. There's also tax incentives on renewable energy equipment, waivers on duties or on VAT for the import of renewable energy systems. Regulations for wheeling and net billing have really been slow coming in the Caribbean. To give an example of some of the programs in place, the Renewable Energy Rider program in Barbados was launched a few years back and initially allowed customers to choose between two different types of arrangement: a sale and excess arrangement and a buy-all-sell-all arrangement, back when it was first launched. Bahamas is also working on a Renewable Energy Rider program. The Bahamas has a residential energy self-generation program, and when that was launched, which wasn't too long ago, it only got 50 registration applications, so it's also slow coming online. Feed-in tariffs is another thing that's really getting a lot of press throughout the region. Trinidad and Tobago just recently announced that they're evaluating making changes to their legislative framework and taking a look at feed-in tariffs as well. So there's a lot of movement in the space of legislation and of regulations. Can I have the next slide, please? Now getting into some of the top alternative energy investments. There's several different technologies that are being explored in the Caribbean, as we can see on this slide. Waste energy has some major benefits since it's a stable source of energy. It can be integrated into the grid and it can provide baseload power. Meanwhile, some of the other sources of energy like solar and wind, while they're attractive from the standpoint of their low carbon footprint, they really have to be balanced with sources of baseload power and energy storage solutions in order to maintain the stability of the system. Whereas waste energy is continual, it's stable, it's uninterrupted, and in some cases it's the most adequate source of power. I'm just going to go through a list of major investments that have been announced so we can get a feel for the scope of what's available in the Caribbean in the renewable and alternative energy space. The solar projects that we're seeing lining up in the region, they're largely in this 5 to 10 megawatt scale. Antigua just installed a 3 megawatt PV facility at the airport, and that's part of a 10 megawatt project that's going to include rooftop and ground-mounted solar panels. Aruba will also install solar panels at schools, which is also a 10 megawatt project. Barbados' utility is implementing a 10 megawatt solar plant in Trent this year, and that should be online in the third quarter. Bermuda has a PV plant that will go to tender this year, and that's for a facility at the old U.S. Navy Munitions Peninsula. And that's actually going to generate 20% of peak demand in daylight hours. Cayman Islands has a 5 megawatt solar farm that will come on stream in October, and that's being built by a group out of Pittsburgh. Cuba, the island that everyone wants to talk about, will construct 4 10 megawatt solar plants, and that's thanks to the Abu Dhabi Development Fund. And their government's also tagged 2016 as the year for attracting investment in wind. Wind is also important in Aruba. The Varapet and Urirama wind farms together are going to actually account for 35% of energy production in Aruba. Bahamas has been looking at and evaluating waste to energy in New Providence for quite some time. And in Barbados, there's also 2 waste to energy projects that are currently under evaluation. Ocean Thermal is also doing feasibility studies in Barbados. In St. Kitts and Nevis, Dominica, St. Vincent, the Grenadines are all in the space of geothermal. As well, geothermal drilling completed last year in Dominica. And now they need to procure the turbine, and the government expects to have a geothermal plant up and running in 2017. In St. Kitts and Nevis, they're also testing geothermal. There's a power purchase agreement already in place for 10 megawatts to be installed in St. Kitts and Nevis. In St. Vincent the Grenadines, they're also tracking to begin geothermal drilling in the second quarter of this year. And they also expect to have production online by 2018. And then we have the larger scale economies like the Dominican Republic, which has over $900 million in renewable energy projects lined up, which includes 360 megawatts of wind and 130 megawatts of solar. Guyana has extensive hydro resources, which they're going to exploit with a 100 megawatt facility that will be built in Region 7 by a Canadian mining company. There's also 3 rivers that the government has identified and flagged for hydro projects that we can expect to be looked at in the near term in Guyana. Then there's a 25 megawatt wind farm. And for Guyana, just like for Suriname, it's important to remember that there's a really exciting opportunity to provide power to northern Brazil. Jamaica has about $200 million in green energy projects coming online this year, mostly in wind, hydro, and solar. And Trinidad is just now taking a look for the first time at how to build out a renewable energy sector. So that is a view of the region. Can I have the next slide? Before I hand it over to Ben, I did want to offer a special discount on our Caribbean Energy and Mining report for our webcast attendees, and you can get that at globalnewsmatters.com/shop, and the coupon code is REWebinar50, and that's 50% discount off that report. Great. Well, I'm going to put up the next slide, and now I'm going to go ahead and pass it over to Mr. Ben Moody, who is going to give us some insights on the financing piece of developing renewable energy. Ben, you can go ahead and unmute your mic.
My name is Ben Moody. It's a pleasure to be with you today. Just to give you an overview of Pan American Finance, we are an advisory firm based in Miami, and we focus on providing mergers and acquisitions and capital raising services around the Caribbean Basin. Over the last 5 years or so, as Melissa mentioned, we've advised on over $1 billion in renewable energy transactions, including mergers and acquisitions and capital raising. We advised on a $245 million project finance for what's now the largest new geothermal project in Central America, a 72 megawatt San Jacinto geothermal project in Nicaragua. We helped one of our clients, Kawa Capital, to buy the certain assets of Conergy, the German solar EPC contractor and developer, out of insolvency. in 2013. We've advised, we helped our client Kinetic Solar to raise 300 million euros in new equity from the Infrastructure Investment Fund that's managed by JP Morgan Asset Management to invest in solar projects around the world. We advised our client Interenergy on the acquisition, bridge financing, and $300 million long-term project debt financing for what is now the largest wind project in Central America. It's the 215 megawatt Penomene wind project in Panama. And we're currently advising on a $140 million project financing for what will be one of the largest solar projects, 143 megawatt solar project, which is based in the Atacama Desert in Chile. We have extensive experience in working with debt providers and equity providers who focus on the Caribbean Basin region, including development banks, local, regional, and global banks, and the strategic and financial equity investors that focus on the region. Today, what I want to talk about is to provide an overview for those listening and watching for the amount of investment that there's been made in renewable energy around the Caribbean Basin over the last 5 years. We have identified from January 2010 to December 2015, we've identified 80 renewable energy projects that have raised debt or equity financing. Represents about 2.2 gigawatts of new renewable energy capacity, with a total investment amount that's approaching $6 billion. We focused on primarily utility scale power projects. These exclude the inside the fence biomass projects and the smaller distributed generation solar projects that have also been done around the region. And I focus on the Caribbean Basin because although certainly the Caribbean islands are active, the majority of what's been done over the last 5 or 6 years, has been in Central America. 60 plus of the 80 transactions that we've been able to identify were in Central America, representing 1.8 of the 2.2 gigawatts and a total investment of about 5 billion. So, 5 of the $6 billion of investment have been made in Central America. The remaining 18 renewable energy projects have been in the Caribbean. They represent 0.3 or 300 to 400 megawatts of power, with a total investment amount that's just below $1 billion. These on average, the projects have of the $6 billion approximately of investment. It's been financed with about 70%, just over 70% of debt, and the rest is the 30% is with equity. Slide 4 provides an overview of where the transactions of where renewable energy financings have happened by country. The most active country in the last 5 years has been Honduras, which has been principally driven by its feed-in tariff regime for solar. Quite an attractive feed-in tariff regime, $180, which has now been reduced to about $150. Thank you, I can see it now. Panama has obviously been a market of interest and importance, followed by, given its dollarized economy, investment grade, and followed by Costa Rica. In the Caribbean islands, the Dominican Republic has been the most active, which follows from the information that Melissa has presented, followed by Jamaica. In the other Caribbean islands, we've seen there are a couple of projects, interestingly, in Cuba, a couple in Curacao, Antigua and Barbuda, and St. Kitts and Nevis. So every country in Central America has now succeeded in adding, over the last 6 years has succeeded in adding renewable energy to the mix. The largest project in the region was the largest project financed over the last 6 years was the Interenergy wind project, the 215 megawatt wind project in Panama. If you could change this, if you could move to the next slide, please. The next slide provides sort of a view of how this 2.2 gigawatts has evolved by country over the 5-year period. It's been growing rapidly. In 2010 we saw just about 300 megawatts, and it's been has grown very quickly with a compound annual growth rate of 46% over this period to 2.2 gigawatts of power in aggregate. And new capacity, it's hard to get the statistics, represents more or less 10% of total installed capacity around the region of about 20 gigawatts. And as you can see, the blue bar along the bottom, which represents Honduras, is driven by the attractive feed-in tariff regime, particularly for solar, which has driven the rapid rise in new capacity from 2013 to 2015. Panama obviously benefits from the new wind project, and you can see, the sort of the sedimentary layers of new capacity being added by country, with the thinnest slice on top is the new additions around the Caribbean, which have not, which represent, as I said, just under a gigawatt, just under $1 billion, about 400 megawatts of power versus the 2.2 gigawatts. If you could move to the next slide, Melissa, we'll look at how this has what technologies people have invested in. The largest in terms of megawatts, 1 gigawatt of power of the 2.2 gigawatts is in terms of wind projects. Solar is 550 megawatts. Small hydros about 500 megawatts, and the rest is geothermal. As I said, we haven't been able to track as accurately because they're not disclosed financings, the biomass and distributed solar power. So small hydros have represented the most in terms of the number of transactions done, but the largest amount of new power has come from wind. I think what's interesting is if we move to the next page to see how investors have moved from the traditional focus on small hydros, which is a lot of the power, which was where renewable focus in Central America was focused in the past, to wind and increasingly to solar. And this is driven by the continued and dramatic fall in prices we've seen in solar in particular. Solar has added, from 2013, all of the new capacity has come on between 2013 and 2015, from zero in just under, just from 8 megawatts in 2012 to 550 megawatts in 2015. And this is, the price of solar is reduced dramatically. In Chile, we're seeing, it's not true in Central America or in the Caribbean, but in Chile, we're seeing EPC prices for solar approaching $1 a watt. And the cost of installing solar is expected to continue to reduce. Wind has had the same benefit as well, but as you can see, and has increased in the last couple of years. And geothermal and small hydro, which have the traditional sort of focus of renewable energy, steady additions, but the majority of the focus of a new investment has been in wind and in solar. If you could turn to the next page, Melissa. In terms of we now talk about how these projects were financed. In these markets, the largest and most consistent source of debt financing has come from the development finance institutions in Central America, around the Caribbean, we've seen activity from the Central American Development Bank, CABE. Probably the most active leaders in the market have been CABE, the IFC, and the Inter-American Development Bank. But we've had very active involvement from the European development banks, from Holland, Germany, France, Austria as well. 70% of the debt that has been provided to renewable energy projects over the last 6 years has come from the development finance institutions. Commercial banks have participated reasonably actively, but and we see this most prevalently, I think, in Panama to some degree, but in Guatemala, where the commercial banks have probably the most experience in project finance in the region. On average, the new renewable energy projects, like power projects everywhere, have been able to achieve about just over 70% finance leverage debt to equity for the projects. But you can see that you can see that more than 70%, 75% of the projects are at least 60% debt. Some of the projects obviously have had less, and you can see that in the top right-hand corner. On average, this about 70% leverage has been consistent over time. It obviously depends from country to country, from whether PPA or feed-in tariff. Today in Panama, with power prices having come down so much, there's the availability financing, which had been very strong, has reduced a little bit. But debt financing has been available for projects. The majority of it has come from development banks. The reason for that is that development banks have the most experience in completing project finance transactions for renewable energy projects, and critically, they provide the longest tenor debt, and it's tenor that matters, particularly for solar projects, in allowing equity investors to obtain the returns that they need in order to make the equity investments. If you could turn to the next page, Melissa, we'll look a little bit about where the equity has come from in aggregate. And what we see is that that governments and local investors provide this sort of the base layer of equity to support new investment in renewable energy projects. Local investors, country by country, have provided 36% of the total amount of equity that's been invested. But as the Caribbean Basin region has become on the map, as PPAs have become more available, as the feed-in tariff regime in Honduras became more attractive, we've seen we've seen investors who focus regionally across Central America, more broadly across Latin America, and global investors coming into the market as well. And today, and so over the last 6 years, more than half of the primary equity sponsors were private equity investors with multi-country experience. I think if we turn to the following page, based on I just had a couple of observations about what it takes to complete renewable energy projects in the region. Lessons that we've learned and that our clients have learned from completing the transactions that we've worked on. The first thing I would say is I think maybe this is that renewable power is cost competitive on a levelized cost of equity basis around the region, and not just in markets that import thermal fuels. Solar PV and wind projects are approaching gas-fired power, natural gas-fired power globally. The cost of solar PV is still falling, and renewable power in many markets in the region is the most appealing source of power, and is less expensive than using diesel or even imported natural gas. Where we've seen projects get completed most promptly is with experienced and financially strong sponsors. Financial strength mitigates completion risk and operating risks that are associated with projects. The availability of sponsor support, supplemental equity to make sure that projects get to COD, to operating status, is absolutely critical, particularly when you're dealing with the development finance institutions. We found in almost every case, obviously, there's a gradation. It's less for solar, more for wind, and the most acute in geothermal. Is as an investor or a developer of a project, you should expect a debate about the amount and the quality of the resource. The lender's engineer, by definition, is going to be more conservative than the owner's engineer. We've found that you can look at the same resource and have, in some cases, even very widely different opinions. In order to get a project to completion, the credibility of the owner's engineer with the lenders and the lender's engineer is critical to facilitating a smooth and uninterrupted process towards completing financing. As I mentioned earlier, while the amount of leverage is obviously important, and we've seen that over time, projects have been able to achieve between 68 and 72% of the capital structure. It's loan tenor that is loan tenor, the being able to get from not 12 years, which is where most commercial banks are, 10 to 12 years, which is where most commercial banks are most comfortable, to 15 years and beyond, is the most important to attain for owners to achieve the returns that are needed in order to underwrite and to sponsor projects. So rather than focusing on, although it's obviously important, rather than focusing necessarily on the upfront fees, on the spread and the interest rate, all of these are obviously critically important. Obtaining the longest tenor that one can achieve has a significant positive impact on equity returns. And then the final thing I would say is that project completion risk is real, and all lenders will focus on this in their underwriting process. By definition, developers are, their glass is more than half full. Optimism is a critical quality in developing these projects. But I think the experience we've had is to expect the unexpected. If it can go wrong, it probably will, particularly in these markets around the Caribbean Basin. Projects cost more and take longer than are planned to be completed, even the best organized projects. And as a result, lenders require that adequate contingencies for project delays, cost overruns, and the unexpected be built into project costs. We found that the debate, the second amount, if the largest and perhaps most contentious debate is about the renewable resource itself, the debate about completion risk, contingencies, and the ability of and the willingness of the sponsor to support getting the project into operation is often the most contentious part of bringing a project finance to completion. And that concludes the slides that I wanted to cover today. And I'll turn it back to Melissa and to take questions. Thank you so much for listening today.
Thank you, Ben. That was excellent. Now we're going to take a few minutes to go over some of the questions that have come in. We got a lot of questions on Trinidad and Trinidad's plans in the renewable energy space. And I know that Ben recently sat on a panel at Green Energy Day at the Trinidad and Tobago Energy Conference. So Ben, is there some further information that you can give us about that and about what's coming in renewable energy in Trinidad?
Thanks very much, Melissa. Pan American Finance has had the pleasure of being quite active in looking at investment banking transactions in Trinidad, and I was invited to speak on the Green Energy Day last week for the Trinidad Energy Conference. The government, the Prime Minister, the Minister of Energy, and the Minister of Urban Planning used the conference to roll out to the new renewable energy commitments that the government of Trinidad made in Paris at the end of last year. Trinidad which is one of the very few countries in the world that has zero renewables as part of its electrical energy generation mix, has announced a commitment to have 10% of electrical generation be from renewable energy by 2021. It's while that is 10% is in global terms quite a modest target, for Trinidad it's going to be a stretch goal, I think. 10% means all of Trinidad's electrical generation is from natural gas. Natural gas, the price of electricity in Trinidad, depending on who you speak to, is somewhere between 5 and 6 cents, and so it's very low for the Caribbean islands and for the Caribbean Basin. Perhaps the lowest cost of power in the region. 10% of the electrical generation, of power generation, is according to the Minister of Energy, 177 megawatts of new power. It's likely that the majority of this will come from solar, some wind. There is some wind resource, particularly in Tobago. There are a couple of sites that make sense on the Atlantic side of Trinidad as well, but primarily it's expected to come from solar. And the government is obviously has not yet defined how or what kind of incentive will be used, but they were discussing the use of a feed-in tariff regime in order to incent private investors to begin to think about investing in renewable energy in Trinidad. It's going to take, in our view, a couple of years for the policy and regulatory framework to be put into place. But over the next couple of years, there'll be discussion, and the government outreach to developers and potential owners for how or under what circumstances people might begin to invest. I think that as a personal observation, given that the price of power today in Trinidad is so low, and the incentives for a feed-in tariff would need to be much higher than the price of power at about 6 cents. Honduras and Puerto Rico 15 to 18 cent feed-in tariff. I think that new equity investors are going to need to have assurance from the government that the feed-in tariff regime would not be retroactively adjusted, as we've seen in Spain and in Italy, because that would provide a significant disincentive for consideration of new equity investment. But in any case, for the region, for the Caribbean islands, 177 megawatts at today's prices of about $2 a watt, $350 $2 a megawatt, $2 million a megawatt would be about $350 million of new investment needed in Trinidad over the next few years. 70-30 equity financing, 250 million of debt, $100 million of equity needed in order to allow the government to meet its 10% target. Melissa, back to you. I hope that answers the question in with some specificity.
Absolutely, Ben. That was great. We've also got a lot of questions in about risk. Could you elaborate a bit more about what are the greatest risks for the developer and for the bank in these types of projects?
I covered some of this in my sort of lessons learned, but I think that what we've seen in terms of risks, let's see, on the revenue side, we've seen in the solar auctions in Panama some over exuberance in bidding, in the pricing that was bid for the PPAs. There were 4 bids at sort of between 9 and 10 cents. It seems that only one of the 4, maybe 2 of the 4 winners of the solar auction in Panama would move forward. There's resource risk, clearly, that is less to do with solar, although unlike Chile and which has a very high solar irradiation, the rainy season, the impacts of El Nino are affecting solar and wind resource in ways that we haven't seen in the past. Clearly, geothermal resource is obviously of significant debate, so the resource risks are there. As I've mentioned, there's project completion risk is probably the largest risk that both developers, owners, and lenders focus on, and that can be not just delays and cost overruns, but the environmental and social issues require a great deal of study and analysis. We've seen hydro projects in Guatemala delayed or even stopped, not just in the development stage, but also in construction stage because of social, because the project has not been able to reach a social compact with the local communities. This has been particularly true in hydro in Guatemala. So I think that the lessons from geothermal development in Nicaragua, El Salvador, and Guatemala, and El Salvador in particular, can be, as well as in the US, are very pertinent to the potential geothermal resource that exists in the Eastern Caribbean. I think that developers who don't have really deep experience in geothermal will underestimate the difficulty and the cost of achieving the drilling programs needed in order to create a sustainable geothermal resource. We've seen on the wind side in Puerto Rico, there were a number of wind PPAs that were awarded that, on reflection with longer measurement, the wind resource has been found to be much less than was anticipated. And in fact, some of the wind PPAs in Puerto Rico have now been converted into solar PPAs where the resource is more predictable. And I think that could also be true for people looking at wind development in the Caribbean. And solar, as I think, as I've mentioned, I think is most affected by the change in climatic conditions, particularly rainfall that exists that is going on in the world today, and that's much less predictable. Obviously, it's much less measurable, but it's certainly it's one area where we see where there's the potential for a debate, an unexpected debate between developers and owners and lenders.
Great, Ben. Thank you. Well, that's all we have time for today. So I'd like to thank Ben Moody and the team at Pan American Finance for their contribution to today's webcast. And thank you all very much for joining us. Have a wonderful day.